Welcome back. Happy Deepavali to all of you. I thought I'll release this indicator on the occasion of Diwali. That's the reason I'm recording the video on the festival day. But that's all right. Let's quickly get on to this indicator. This is basically the Nifty probability indicator. This would enable us to do both weekly and monthly expiries without spending a lot of cognitive effort on where the Nifty could expire. So let me, before I go ahead into details, let me talk about the genesis of this idea. I had run this just before this particular, I had run this just now. Let me run in front of you. So let's say instead of 2015, I'll change 2016 and then July 31st. And then what it does is it will look at all the expiries that were done for last how many weeks. All right. So it says, no, this is 10 basis points. That's going to be too many details. Okay, let's stop here. It says so 453 weeks. Maybe we'll run for 500 weeks approximately. Let's go to May and then May 1st. Let's see. No, sorry. May 1st, I'll go to 2015. May 1st. Yeah, it's about 506 weeks, approximately about 500 weeks. So what does this say? This is very important to know. This is basically a probability model, or from the statistics perspective, you can also say that this is actually shows the percentile. What does this mean is, if you look at last 506 weekly expiries, it's basically not the weekly period, but it's expiry to expiry. I think most of you know the Nifty expiry was from Friday till Thursday. And then recently from September 3rd this year, it got changed from Wednesday to Tuesday. So that's the expiry, right? What does this say? So what it says is in last, let's say 506 weeks, there were only 8 occasions where the Nifty weekly expiry was more than 5%. One of the expiry more than 5% was this year, sometime in April. But otherwise, if you look at this statistics, right? So mostly, if you take this number, about 94% of the times Nifty expired below plus 3%. This also includes negative. So that is something that you need to be cautious. If somebody just wants to sell a call option, this is the best way to do this, right? So let's say somebody simply wants to sell a call option. So it's basically what it says is about 85% of the times Nifty expired below plus 2%. This also gives a reference for this week. Anyway, expiry is done. Today expiry happened somewhere in this range. So this actually comes under 94% probability, about 3%. It's approximately about 72 times out of 506 weeks, or between 2 to 3%. That's what the statistic says. Somewhere here you can see this number. This number you can see. So today, as I said, Nifty expired at about 25850 or whatever. So that would fall under this number. Suppose if you do not want to get into COVID period and then wanted to look at probably later date, so you can actually get on to, let's say, 2021 January and then have a look at it. You will also see the above 5%, we have very less. We have only 2 occurrences in the last 234 weeks. If I actually reduce this even further, let's say 2022 January, you will see just only one. This happened in April this year. So similar exercise we could actually do for monthly also. So let's go to monthly, starting with 2015 and then January 1st. When I get them, I will actually talk about them down the line. This is also monthly expiry. It actually happens from the last Friday of the month to last Friday of the previous month to last Thursday of the current month. So that's the sequence. To take into consideration, for instance, if there is a holiday on Friday, it would take the next Monday. If Monday is also holiday, it will take the Tuesday. It is 82% of the times Nifty expired below 5%. For example, if it has to fall into this 82% region and Nifty has to expire below 5852, we are left with another couple of days from now. So probably Nifty would expire either one of these categories, at least from the way that I'm looking at currently, one of these categories. So below 87% or below 82%, one of those things would definitely happen. It might get onto this zone also. But then these instances, now I know it happened this month, but will that happen again next month? Nobody knows. This is a probability model, right? It's very similar to tossing a coin. Suppose if you toss a coin, if there is a head, There is no guarantee that head will not happen next time. So because coin doesn't have any heart or the mind to think, so it's a very independent variable. But when it comes to stock market, it's not very independent, right? So usually what would happen when there is a spike in the Nifty, definitely that spike would not sustain for a long time. So either because of the profit booking or some news that would destroy the market trend, any of those things could happen, and then the Nifty probably might take the downturn. So that's how this entire thing would work. Technically, if you look at these numbers, they typically follow the normal distribution. So that's how this entire probability model would work. I know I spent a lot of time on this model, but let's get on to the indicator itself. So indicator, this is very simple indicator. So what it does is whatever the number that you had seen here, I had inbuilt into the indicator. I took the last 5 years data and put that as an input. The reason is 10 years, there is a COVID as well. So COVID statistics, I would call it as an outlier. So that's the reason I did not want to take them. But I took from last 5 years or so, which is probably a lot more relevant for the current way of Nifty behaving. Now let's get on to this one. What would happen at the starting of the week, for example, if we take here. All right, so let's look at the Nifty, how it started. So starting off this week is October 15th. So October 15th, this started at about, the price started about, and somewhere here, right? So 244147. So it gave a option called sell put. So now let's get on to some of the options that we have. That's very important. So I had put the probability as 85%. So somebody can put probability of, let's say, 80% or maybe even 70%. Depending on the percentage that we put, these values will change. So as you can see, put strike price is minus 1.1. That is the 70% probability, and the call it says plus 1.2%. However, would we blindly take a strangle here? The answer is absolutely no. If the market is trending, you do not want to take a strangle. Instead, you just want to do a bear call spread or bull put spread, or you can also do bull call spread, the bear put spread. It's up to you, whatever you want to do. But here I had simply suggested saying that somebody would go on and sell the put at about 24,900. That's what it is. Throughout the week, there was no turn back for the index. This actually just gave one signal, that's all. Week open price is about 25,197, and then we kind of closed the week at about 25,850. If somebody sold bull put spread here, they would have made some money. But I think the life is not going to be that easy, right? If you can see the previous weeks, you got to see some strangle, straddle movement kind of thing. But this week, that did not happen. So I do not want to really get into the back testing at this point of time. But maybe we'll do a simple replay and then see how things would actually change. That will give you some context. So you can carefully watch what is happening here. This would actually suggest what kind of strategy is taking. Right now it says triangle. The reason is this is between the two super trends. That's the reason it is triangle. So ideally the approach is you take this triangle also, will give the prices here. It's not displaying here, but you got to see here. In fact, there is an option where I suppress the label. That's the reason it is not showing up. But actually you can see here, it suggested we should take 25,400 call option, and now it actually turned to bull put spread, I believe. Already a bull put spread. This is 10th October, which was previous week expiry. Now also it is triangle starting of the week, and then after that I believe it's going to change. Yeah, right. So here we got the bull put spread. We can actually play around with this. Let me get on to the options. We have an option to do weekly and then the monthly. Depending on what you would like to do, the values will change. This is your target probability. This is basically suggestive. It's not required. It's where you want to take the hedge. So if somebody doesn't want to take the hedge, that's absolutely all right. You can see the period open line. The blue one is showing, and then it will also show the option strikes where it is taking. So these are all the green was used for the put, and then the red was used for, you can change if you wish to. You can also see whether you want to see the labels or not. This is basically labels. You can also show the cycle start. This is where the expiry actually starts. Whenever there is a change from strangle to spreads, that will show there. If you do not want to see too many labels, you can select this, and then suppose, as you can see, it's little cluttered, right? So you do not want to see whatever happened in the previous weeks. You just want to see from this week. So you can just select the date and then it will show. Now, one very important thing is, anyway, I have selected the weekly and then the monthly. That is already there. So I'm not getting into the details. But let's look at one more important option. So here, by default, though you have these values, right? So if I get rid of this, it will change. By default, you will see 1 hour and then 15 minutes. That is for the weekly expiry. However, you do not want to use 1 hour 15 minutes, but you want to do something different. Let's say somebody wants to do 1 hour and then perhaps they want to have ATR in the multiplier. They can pretty much do this. Or let's say somebody wants to do 2 instead of, let's say, 3. That is also possible. So I did not give too many options here for the trend. The reason is SuperTrend. I think it's usually, as the name suggests, it is probably one of the best indicator to do that. But maybe down the line, I may wanted to give an option if somebody wants to switch between SuperTrend and then maybe moving average. I'll give that option. But I think if I combine both, it might be very cluttered and then you might end up getting too many wrong signals. So thought process of giving this one CPR. Right now, again, as I said, the code is almost like lines. I do not want to write more than 1,000 lines. Scripts are usually run only on the runtime, so they're not compiled in the backend, right? So the loading would take a lot of time. That's the only reason. So I think those are all the features that you have here. You can change the style if you wish to. I think this is pretty much standard, pretty much all the indicators that I do. So you can see a nice table here. If you do not want to see the table, you can say show labels. You can remove them. It's up to you. I think that's all about the indicator. I have actually given access to few people. If you need access, obviously ping me on Twitter and then I will be able to give the access. That's all. Happy trading. And like all my other indicator, this is use this for definitely for educational purposes, not necessarily for your trading decisions, right? So if at all you want to take the trade, definitely do your own analysis. Do not blindly follow this indicator. While this is an indicator, it is not going to remove the human intelligence completely. Have a great remaining day. Bye-bye.